Welcome for today's webinar that answers your questions. Together with Sympass, you have been invited to send in your questions about the Luxembourg tax return. We have gotten hundreds of questions. So basically in this webinar, I have selected a few ones that we will answer together. And if you have any other questions, you can just create an account on taxx.lu. And on the bottom right of the website, there's a chat, and there you can ask all your questions to my team of tax experts. Let me present myself very quickly. My name is Malget. I'm co-founder of taxx.lu, a website that exists since 2018 and that allows everyone to file their tax return in Luxembourg in the most easiest way. Basically, you are guided through a step-by-step online form. You can upload your tax certificates, and then this tax return will be very easy to be completed. And at the end, you're also getting information about how to optimize your taxes in Luxembourg and to save taxes in the future. So let's start right away with the first question we have gotten from Jeffrey. He is asking, in the case of a divorce or pending divorce, can the ex-partners file separate tax returns, or are they required to proceed jointly for 3 years? Basically, the rules are quite simple. So for the year of the divorce, you have to submit a joint tax declaration. Their tax class 2 on your total income, so for the income of the two of you, there will be tax class 2 applied, and you have to pay the taxes for that year still together. You could ask for an individual tax return for that year, but be aware that in that case, it's possible that the transitional period, we're coming to this in a few seconds, can be cancelled in that case. And in that case, if it's cancelled, you are losing a lot of money for the next 3 years, because basically after a divorce, so year of divorce, you're doing the tax return together. And the next 3 years following that year of divorce, you are in a transitional period. And during that transitional period, tax class 2 will apply, but only individually on your individual income. So basically, during those 3 years, you are filing a tax return only with your income, and tax class 2 will apply on only that income, which helps you really to save some taxes for those 3 years. And after 4 years after the divorce, then you will be back in tax class 1 for singles, for example, or tax class 1A for singles with children. Next question from Merv. Hello, I'm an employee, but my husband is not. He's working independently and receiving income, but not regularly from Germany. Would it be beneficial for us to be regarded as tax class 2? So tax class 2 is for married couples. And basically here, you could save some taxes here, Merv, if your husband's income is lower than yours on a yearly basis. So in that case, it's financially interesting. And why is this so? I have an example here. So this is really the case where on the left side, you can see a couple not married and not in a registered partnership, where one person is earning 100K of taxable income and the other person 0. Could be, for example, because that person is still studying or has no income at all. In that case, if they are not married, nor in a partnership, the income of the person number 1 will be taxed with tax class 1, and in that case, the total tax due is around 30,600 euros. However, if that couple now would be married or in a registered partnership and doing taxes together, then still the taxable income is 100K, because in this example, person 2 has no income at all. But tax class 2 will be applied, and at that moment, the total tax due will be around 19,500 euros. So basically here, by doing the taxes together, claiming tax class 2, you could save around 11,000 euros in taxes. So in this example, it really makes sense to do the tax return together. Another example where person 1 is earning 100K taxable income a year, person 2 40K. In that case, if they are not married nor in a partnership and doing taxes separately in tax class 1, a total tax due would be around 36,500 euros. However, if this couple would be married and doing the taxes together, in that case, total tax due would be only 34,302 euros. So basically, there's still a tax gain of 2,169 euros. So basically, doing a tax return together in most cases is more beneficial than doing the tax return separately. Next question comes from Emma. What are the rules for deducting an outstanding balance insurance for mortgage? So basically in Luxembourg, when you're having a mortgage for your home, for your main residency, you can also deduct an outstanding balance insurance. So basically it's a life insurance for that covers that mortgage. And in Luxembourg, you have two options to pay for that mortgage. You have the possibility to pay, sorry, not for the mortgage, but for the insurance. So those insurances, you can pay them with an annual premium over the duration of the contract. And if you're doing so, the premiums are deductible, but they will be in the category insurance and interest on personal loans. And there's a maximum limit of 672 euros per person in the household. So basically, if you have already, I don't know, two car insurances that you are deducting here, and maybe a private healthcare insurance, very, very often you are already over the maximum deductible limit in this category. And in that case, you don't have any tax gains thanks to this outstanding balance insurance that you are paying with a monthly or annual premium. However, in Luxembourg, you can also pay those insurances with a one-shot payment. So basically, you are paying at subscription for the entire insurance, for the entire duration of the insurance. And in that case, the maximum deductible limit is increased. And basically, the ceiling is calculated based on your age and on the number of children in your household. On taxx.lu, on the main website, you can find different simulators, and there's also a simulator for this. So basically, you are just entering your birth dates, number of kids in your household, and then the system will automatically show you the maximum deductible limit for single premiums. I have an example here. On the left side, the annual premium, as I mentioned, 672 euros maximum deductible limit per person in the household. So here an example, a couple, 2 kids, they can deduct in this category a total of 2,688 euros. If you are paying, if this family would pay this insurance with a single premium, then the maximum deductible limit would increase by quite a lot. Let's assume that the father is 40 years old, the mother 38, and they have 2 kids. They can almost deduct a total of 25,000 euros if they're paying for this insurance with a single premium. Maybe good to know, this deduction is not only available for the year of signing your mortgage. So it could be possible that 5 years ago, you subscribed to a mortgage, you did not open at that time an outstanding balance insurance because, I don't know, the bank, it was not necessary for the bank, and maybe you did not have kids at that time, and yeah, you did not want to spend this money. But it's totally possible now, if, for example, now you have kids and you want to protect them in case of your death, to open up an outstanding balance insurance. And at that moment, you can basically claim this deduction. If you want to have more information about this, on the left screen of this webinar, you can see a QR code. Basically, by scanning this QR code, you can book a free phone call with our tax optimization experts, and we can go through your situation and check if there is different insurance products, pension products, and that could help you to save on taxes. So just book a call here with our tax optimization experts if you want to have information about saving on taxes. If you have questions about your tax return, that's another team. So basically, if you have questions about the tax return, contact them through the chat on taxx.lu and not through this QR code. A question from Sean. My partner was self-employed, but is now on disability pension. Is the disability pension recorded as income in Form 100? Or is it recorded somewhere else in the form? Form 100 is the Luxembourg tax return. That's the name of the official form that you have to use for your tax return. And this income is also considered as a normal pension, so you have to add it on the tax form 100 in the category of pensions. Ludovica tells us that she moved to Luxembourg in September 24 when I started my internship in the Big Four. Now I have officially registered my residence here. Should I file the tax return for 2024? Am I eligible for a refund if I paid extra taxes? If so, are these documents there documents I need to sign, file before claiming the refund? Basically, I suppose that here Ludovica, she started an internship after her studies. So in 2024, she had no other income except the salary she got during this internship. And in that case, you can claim taxes back. You can do so by filing, for example, the Form 163. So in Luxembourg, you have the Form 100, which is the normal tax return. The Form 163, it's like a condensated form of the tax return. So in this case here, if Ludovica is not, for example, a homeowner and is not getting any other extra income, she can file Form 163, which is also totally possible on taxx.lu. An example here, a single with a gross monthly salary of 3,000 euros, having started his first job after studying on 1st of July. The withholded tax that has been withheld basically from your employer is calculated with an hypothesis that you are getting this income, this salary for 12 months of a year. So here the annual taxes withheld by the employer has been around 1,500 euros. And by only doing a tax return and tell basically tax administration that you only worked for a few months last year in Luxembourg and that there was no other income, she can claim back a little bit more than 1,000 euros. If you want to know if you can claim some money back, you can basically do a tax return on taxx. You can do a simulation of a tax return. You just start your tax return, and at the end of the process, you will see the amount of taxes that you can get back. If it says 0, it makes no sense to file a tax return. If it says 1,069 euros, I think it's quite a good investment. Raquel is asking, I am a Luxembourg resident and was a partner in the Portuguese company that was sold this year, March 2025. Does the tax on the sale of my share have to be paid in full in Luxembourg? How to declare it? How much do I need to pay? Basically, in Luxembourg, if you are a shareholder in a company, so basically, it's the same if you're buying stocks for Apple, for example. If you're holding them for longer than 6 months, and if you had less than 10% of the company's share capital, then it's tax exempted. You don't pay any taxes on that amount. You see it here on the upper right. So shareholdings held for more than 6 months and less than 10% of the company. So here, Raquel, I don't know if you had more than the 10%, and if you hold them for longer than 6 months, let's assume it's more than 10% that you have gotten. In that situation, you are considered as a significant shareholder, and at that moment it will be taxed, and it will be taxed at half of the average tax rate of your income, which is a maximum of around 22%. Good news here, the first 50,000 euros of the money you got for that sale are tax exempted, and even 100,000 euros if you are doing a tax return together with your partner or your spouse. Those 50,000 euro allowance, basically you can claim them every 10 years. So if you're using those now, for the next 10 years, you can no longer claim this 50,000 euro allowance. If you hold this shares for a shorter period than 6 months, then you will be fully taxed on the amount of the sale. Here's quite the same question. What is the timeline for the fiscal exemption of up to 50K on capital gains from sale of shareholdings of less than 10% of a company share capital held over 6 months? Is the allowance of 50K corresponding to all transactions made during the person's lifetime, or each year the person can benefit from an allowance of 50K? So I think here's a little misunderstanding. If my understanding is correct, so this person, Irina, you hold less than 10% of a company, could be a share from, I don't know, Microsoft, Apple, whatever, and you hold this share for a longer period than 6 months. In that situation, less than 10%, more than 6 months, all the gains are tax-free. So basically here the 50K allowance is not playing any role. The gains are totally tax exempt. So basically it's for all the stocks you are buying, your investments, if you're holding them for longer than 6 months and not holding more than 10% of the shares of the company, the gains are tax exempted. The 50, just to answer the second question about the 50K allowance. So this one is available, as I said, every for a period of 10 years. So every 10 years you can claim again this exemption of 50K. Invoices, expenses related to sport activities considered as a special expense, same as, for example, housekeeping services. Sandy, unfortunately not. Doing sport is always a good investment into your health, but it's not tax deductible. Of course, housekeeping services or crash fees for your children are deductible, but sports activities are not. However, go on with it. It's a good thing to do. How do gig activities such as work for delivery apps need to be reported? Is a certification or permit necessary for those, or anybody can provide services through those apps disregarding their residence and status? Basically, regarding the permit necessary to do this gig activities, we cannot provide you any information, but I know that the delivery apps in Luxembourg, they can help you with this, and normally you need to ask for permit. Maybe those companies are doing it for you. I don't know. Just contact them. Regarding taxation, basically this income is taxable, and you need to add it on your tax return on top of all the other income you have. So, for example, salaries. And it will be taxed based on your total taxable income. And total taxable income, basically in Luxembourg, we have a progressive tax rate system, meaning that the more you earn, the more you will pay on taxes. So here's an example for the tax brackets for tax class 1. So for example, the first 12,438 euros that you are earning, you are not taxed at all. Then the next bracket will be taxed at 8%, the next 9%, and so on. So let's assume you would have a taxable income with your salary of, I don't know, 60K, then every additional euro will be taxed with a rate of 39%. Lucia asks, we are 2 Italians working and resident in Luxembourg. We got tax last December, so this is our first tax declaration. How do we proceed? Should we include our Italians' bank accounts and belongings? If you have gotten into tax in December 24, then for the tax return 24, you cannot yet do a tax return jointly. Basically, if you are in a PAX, in a registered partnership, you have to be in a registered partnership from the 1st of January to the 31st of December of the tax year to do your taxes together. So in this situation, if you're telling me last December, so December 24, the first tax return you can do together with your partner will be the one for 2025. The one for 2024, you are doing it still separately, so 2 tax returns. For marriage is a little bit different. So if you would have gotten married last year in December, then you could do already a joint tax return for 2024 for the entire year. So PAX, you need to be in a PAX for the entire tax year. Marriage, it's basically the year where you are getting married, where you can do your taxes together. Second question, you don't need basically to add to add any information about your Italian bank accounts nor your belongings in the Luxembourg tax return. You just declare your incomes, not the money you have on the bank account. Borak is asking, I have subscribed for a professional association certificate provider e-learning platform directly connected to my profession. Can I deduce the cost of membership for my taxation as an employee? Good question. Maybe you could. So basically it could be accepted as a deduction in the category acquisition costs, so frais d'obtention on the tax return. Anyways, every taxpayer with a salary income already has an automatic deduction of 540 euros. So if those costs are exceeding the 550, you could try to claim them as acquisition costs. However, if you're doing this on a free basis, basically your employer is not kind of forcing you to do so, most probably tax administration will not accept this deduction. So basically they will check if it's really needed for your job, and if you don't, if you are not doing this e-learning and so on, if in that case you would lose your job, then it should normally be accepted by tax administration. So you need to prove them that you need this for your job, that it's one condition from your employer to continue to get a salary. That's basically the rule. If it's something that you're doing on a free basis, like for example, I don't know, an MBA that you're doing just because you want to do it, but you are not obliged by your employer, they will most probably not accept this as acquisition costs. The more information you give here, the better it is. You don't risk anything if you're trying to deduct this here. Worst case, tax administration won't accept it. So just give it a try and then check when you're getting the tax assessment back if they accepted it or not. Brian asks, in what section of the Formula 100 are the details input and what supporting documents information is required in order to declare tax deduction for office space in your personal residence? Please detail tax advantages and criteria required. Bad news, Brian. Normally, home office expenses are very rarely accepted by tax administration because basically your employer is supposed to provide you an office at work, and if you're doing home office, that's more or less your personal choice. There's one accepted exception by tax administration. Basically, teachers in Luxembourg at school, they don't have an office. So basically, home office for teachers is accepted as a deduction on the Luxembourg tax return. And we also have on taxx a special form for those. Nita asks, if a third country national working in Luxembourg sends monetary support to dependent parents who reside in the home country, how can we show the same and get tax reduction? You could deduct those as extraordinary expenses, charges extraordinaires, but first you have to prove that your parents really depend on that support. For example, because they don't have a pension, they're basically living from the money you are sending them. And second rule is there's a minimum threshold you have to exceed. And only the amount above that minimum is accepted as a deduction. And this minimum depends on your taxable income, on your tax class, and on the number of kids in your household. So here's an example of Monsieur Dubois. He's in tax class 1. He has no children. He has a taxable income of 35K. But then what is called the normal charge, so this minimum is 7% of this taxable income, so 2,450 euros. So in the same category, you can also deduct, for example, unreimbursed medical expenses. So that's the case here. And Monsieur Dubois paid 3,000 euros. So only the difference between the minimum, 2,450, and the 3,000 will be accepted as a deduction. So in this case, it will be 550 euros of the deduction. So monetary support that you're sending to dependent parents can be accepted as an extraordinary expenses. You have to provide more information, the more information as possible. So really prove that your parents need this money because they don't have any other income, for example, and then prove as well that you have sent the money. So bank statements can help you with that. And then just be aware that not the entire amount will be tax deductible, but it depends on the minimum threshold that you have to exceed, and only the amount above that minimum threshold is deductible. On taxx.lu, this calculation is done automatically based on the information in your tax return. So if you're doing your tax return, at some point in the process, you will come on the page extraordinary expenses, and there the system already shows you the amount you have to exceed, so you could deduct this on the tax return. Jose asks, I own a rental property in an European country, which has a double tax treatment with Luxembourg. I assume I need to declare the income in the Luxembourg tax declaration. However, can I use the amortization and bank interests even if the property is not located in Luxembourg? You are right, Jose, you need to declare this on the Luxembourg tax return. So if the rental property is located in Luxembourg, it will be taxed in Luxembourg. If it's outside of Luxembourg, then the rent that you're getting is tax exempted. However, it will have an impact on the taxation of your Luxembourgish income. We won't go into details. It's a calculation that has to be done, but you have to declare basically your global income on the Luxembourg tax return. Good news here is, and that's the main question from Jose, you can basically deduct exactly the same expenses that you could deduct if this property would be here in Luxembourg. So you need to file the form 190/210. So that's the official form for rental income. And there you can add all the expenses that you could also declare here in Luxembourg. So the taxable rental income here, it's basically the rent on one side and all the deductions. And deductions, basically you have different kind of them. You have the interest you are paying on a mortgage, for example, depreciation or amortization, as Jose says. It's a percentage of the price you paid for that property in that country. That is also considered as a deduction. Regarding this, the tax law got a lot more complicated about the rate for depreciation. So easiest way is again to do it on taxx.lu, where you are just mentioning the information you know, construction date of the building, purchase date, and then the system automatically will take into consideration the right depreciation rate. Then you can also deduct all the charges that are not reimbursed by your tenant, for example, property tax, repairs, renovations, the depreciation of the kitchen, and so on. So easiest is just to do the tax return on our website, and then you will see different possibilities of deductions. Ricardo asks if I have income from properties registered in my name on which I pay a flat tax, withholding tax in Italy. Is this income included in the calculation of my total income? Basically, it's the same question than before. If it's in Luxembourg, you will have to pay taxes on this here in Luxembourg. If it's outside of Luxembourg, in this case, Italy, you have to declare it. It will not be taxed, but it has an impact on your Luxembourgish income taxation, which will increase. Peter is a cross-border worker. Can I declare my construction loan for a house in France, in Luxembourg? Is there a limit? Basically, if you're building your personal residence in France or Luxembourg or Germany or Belgium, then the mortgage interest is indeed deductible. And deductible limits changed this year. So basically, during the construction period, there is no maximum deductible limit. So you can fully deduct all the interests you are paying. Then the year of completion plus the following year, there's no maximum deductible limit neither, which is good news. With the interest rates that have been quite high, you can deduct quite a lot. Then the next 4 years, it will be a maximum of 4,000 euros per person in the household. Next 5 years, 3,000. And afterwards, it will be 2,000 euros that you can deduct here. So this is the same for a home in Luxembourg or a home just behind the border. It's not the case if it's a secondary residency. So if you're building a house somewhere in southern France for holidays and you're not renting it out, at that moment, interests are also deductible, but they are deductible in the same category than insurances and interest on personal loans, which where the maximum is 672 euros per member in the household. Here we are talking personal residence, so main residence where you will be living. Same question, I guess, from Henrik. I live in Germany, but I work in Luxembourg. I've built a house in Germany. I want to deduct interest and other expenses related to the construction of this unoccupied building. There's a publication on my guichet. However, I'm not sure if this is still valid. Good point. I checked. This is no longer valid. I think the last update on my guichet was from 2016. So don't trust everything that you find on my guichet. So deductible limits are what we just saw. During the construction period, no deductible limit. Year of completion and the following year, no deductible limit. And then limits apply per person in your household. How to file my tax return? So basically, easiest way is to do it on our website. We are the leading online tax return tool here in Luxembourg. And you being a member of Sympass, thanks to your employer, you can enjoy a 20% discount. How to get this discount? Just check it out on sympass.lu. There you can find the discount voucher that you need to get this discount. If you want to have a personalized tax optimization consultation, because it's now basically at the end of the year where you can still do something for 2025 to save on taxes, you can just schedule a call here by scanning this QR code with our tax optimization team. As mentioned, if you have questions regarding your tax return, don't do this here with this QR code. Just contact my team through the website taxx.lu. We can help you regarding tax optimization with all the possible financial products that you could subscribe to and deduct on the tax return. So it could be life insurances, private healthcare, home savings plans. We are having a look into your situation and then tell you exactly what makes sense in your personal situation. Also good news, if there are US citizens in here in this webinar, just know that very often banks cannot provide you with private pension plans, and they tell you that they cannot provide those. However, insurance companies can. So just contact us. We can help you to set up also private pension plans, which makes absolutely sense. With all the discussions about a pension reform in Luxembourg, private pension plans will be supported even more during the next years by the Luxembourg state. I thank you for your presence today. I hope this was quite helpful information. And if you have any questions, just go on taxx.lu. You will see we have also a tax return guide. We have hundreds of FAQs. We have hundreds of articles about different topics. You can find a lot of information, and normally it's also better updated than some information on my guichet, as we just saw. Thanks a lot for your time, and see you next time. Bye-bye.